Good morning, traders. This is a live trade recap. I took 3 trades this morning. I have them all on video. We're going to go over them right now. If you like this sort of thing, hit the like button. If you want to see these videos every day, subscribe. So today was a very long morning. There wasn't a lot going on early on. The stocks that were top 3 on the top gainers list. Let me see if I have there we go. So you can see ENTX, CFRX, and this thing I think was the float size or the price or something was not right. So it was just those two, ENTX and CFRX. Now my plan and strategy says that it must be trading higher than the previous session and the previous day. So you can see it's trading higher than the aftermarket, but it's not trading higher than the previous day. That's denoted by this line. So that means that I can't take an entry unless the price breaks out above that. So there was never any trade for me on ENTX. And then TRCH I was looking at for a little bit, but then the float size is too large. I only trade things that are maximum 110 million share float size or less. And then CFRX was also a low float top gainer. And this is the high of the previous session. And as I said, I can't take a trade unless it breaks out through that level. And it never did. And I also want to point out too, like some things that are part of my plan that saved me from bigger losses that I used to trade, or for example, like a reversal trade. And you can see here that this thing came down and then it started to give a green candle showing signs of a reversal. And I'm sure some people jumped in there, and then look what happened. This thing tanked. And that's one of the reasons, not saying it never works. Sometimes it does work out. But I just find those reversals extremely risky. And the probability of them working out is pretty low overall. Let's see what else. So yeah, you see what happened to ENTX. It curled on over. That's not to say that even if it broke out through this previous high that it would have been a good trade, or I'm sorry, it would have been a good trade as far as my criteria is concerned, but not to say that it would have been a green trade. So then Gigm popped up as well. You can see it made number 3 and it was a low float, so that means it automatically goes onto my watch list. But one of my criteria, my plan says, if there was an entry that I would have taken that already took place and I missed it, then I can't take a trade on it. So, I mean, and I kind of missed it, kind of didn't, because there's no way I could have taken this back here because it was not on the top 3, right? But still, as far as like an ABCD pattern goes, that's pretty clear cut that it went A, B, and then they did a pullback on this one candle. So if this was in the top 3, I would have entered right there and I would have made a 2-hour trade. But again, it wasn't in the top 3, so I couldn't. But since there was an entry in there, a previous entry, I can no longer look for an entry based on my plan and strategy, because the second entry is less likely to work out than the first one. It does work out sometimes, but it's less likely, and I don't want to take anything but the best setups. So, and then just for fun, I kept it on my watch list to see, like, what would happen if I would have taken that second entry. So I marked out all the lines. First of all, the solid lines are like the first entry. Again, if it was in the top 3, this would be the entry, this would be my stop, and there's my target, and it would have been a successful trade, but again, I couldn't take it. And then, so the one that, like, let's say that this thing just ran straight up, then I could have taken this trade, which would have made my entry here, ideal entry, and my stop loss here, the dash line, and then my profit target would have been up here. And you can see it didn't, it never hit it. And I just put a note out here just to remind myself, just in case, because I'm sitting here for a long time. I don't want to be teased into a trade, so I just wrote that little note there to remind me. So now, this was the only stock that still met the criteria to be on my watch list, because it still hasn't broken through the previous day's high, and if it does, then I have to take an entry on the first pullback. So that's why it's still on the list. It was still in the top 3. In fact, I think it was number 1 right there, but it still wasn't given any entries. And then finally, this is right before 5 a.m. My cutoff for looking for entries is 5 a.m. I start at 4 and I go till 5, and that's it. So this thing, Bhat, popped up in the top 3, and I tried to look just like I did on the last one to see, is there an entry that I would have taken before this one, and there really isn't. Let me see if I can get the, okay, here we go. So all of this is pretty much junk back here that, is indications of like no volume. So this is just kind of choppiness. And this line is on here from some other day, I guess, that I was looking at this stock. But it was clearly trading up above the previous session's high and the previous day's high. And it's just now making a move. You can see all this volume coming in. So this is really like the first move, and this is the first part of the ABCD pattern. Here's A, and then B is getting worked out right now. So there was really no reason that I could see not to take a trade. So now I'm waiting for a pullback, which it's giving, and then my criteria says that I have to wait for a 1 minute candle to make a new high, and that's where I enter. So that's what I'm looking for right now. So let me just show you real quick here. So you can see where I'm hovering over this candle previous to my entry. That determines the price that I want to get in at. So this has a high of 201. So I'm waiting for the price to show 202 or better, and then I get in. So watch this little bubble over here. There's 201, which is the high of this candle. There's 202. Now I get in. I get filled exactly where I want to, 202. And then my low is 1 cent below the previous candle. I'm using the 2-hour calculator, which you can download from my Facebook trading group. And you can see, I'm trying not to rush through it here, but you can see I got stopped out pretty quick. So there it's touching this line that marks out my stop. And it has to break through that because my stop is actually 1 cent below where that line is. But I like to have the line there. That way it's very easy for me to visually see when do I need to stop out. As soon as I see the candle break that line, then I exit. So my ideal stop was 191, I believe, or 192. Yeah, and you can see what happened there. Just flushed down really fast, and I got out at 189. So I took a little slippage there, but sometimes there's nothing you can do about it. A lot of times other traders are using the same stop, so once it gets hit, everybody jumps out at the same time, and sometimes you get slippage like that, but there's really no way around it. If you increased your stop to avoid that, then you're probably going to take even bigger hits. So I'd rather keep the risk as low as possible. All right, so now that first trade failed, as long as the point C doesn't go below point A, I have to look for the next entry, and I can do that up to 3 times. And the reasoning behind that is because by the third trade it tends to work out, and I'll show you the proof of that I have so far. But let's see what happens on this next trade. So again, same thing, I'm waiting for a candle to make a new high. I get in exactly where I want to, I believe, on this one. Again, using the 2-hour calculator. So my profit target was 207. It looked like this one was probably going to work out. It was heading up, and then it started to come back down. You can see I canceled that order because if it comes down and hits my stop, I can't stop out if that order is there. So as soon as I see it come near my position again, I cancel the order just in case I need to stop out. And then here on this one, it looks like I got filled exactly where I want to. Let's just go back to, okay, right there. Looks like it's going to stop me out really quick there. So 189 was exactly where I wanted to stop out at, and that's where I got filled. So no slippage there. So that was a successful trade, not a green trade, but not all green trades are successful trades, and not all red trades are bad trades. So here we go. So this is the third and final trade that I can take. Same thing, entering for the break of a 1 minute candle. I caught a little slippage here, 192. My ideal entry, so this is the entry that I got. My ideal entry was 190, and it makes a big difference on my profit target because on this first trade, the profit target was 214, and it would have been 208 if I would have gotten my ideal entry. And it was, I think, mostly my fault because I wasn't quite ready, I think, or I had my fingers there, but something happened where I maybe looked at somewhere else on the chart for a split second, and by the time I got back, I triggered my entry. I mean, I'm talking about like a half a second late, so not enough to not buy in, but that might be why I got that 192 instead of 190, but you never know. May have happened anyway. I just wanted to see. I don't think it ever even went to 208. But it's always interesting to see, like, if you would have gotten your ideal entry, would the trade have worked? But I don't think it did, or would have. And then, I was just in this trade so long, I don't pay attention to any of this stuff, but I just, for fun, put some trend lines on there and a resistance line. I mean, the resistance line is pretty meaningful. If this was established by 2 previous candles, if it broke that level, this thing would have almost certainly popped and filled me out. So it would have been nice to see it break that level, because then I would have felt like, okay, this trade's probably going to work. These diagonal trend lines don't mean near as much, but I just noticed, visually a trend channel forming there, and if you look for patterns hard enough somewhere, you're going to find them, and they don't necessarily mean anything. So again, I was just kind of killing time while I have to sit into this trade. The only 2 outcomes are it hits my profit target or my stop loss. There's nothing I can do. So that's what that's all about. And then you can see what ended up happening is comes down near my stop, bounces up a little bit. So again, I just have to sit there. I can't decide whether or not this trade is going to work out. Just have to let it do its thing. And just trying to show you exactly where I got stopped. So right now it's at 184. I think it comes down real fast. And I think I caught a few cents slippage on this one. There's 183. There we go. Yeah, see, it went from 184 to 180. So, not much I can do about that. And then, so I caught like 3 cents slippage on the way out there. So that stinks, but nothing I can do. That's following my plan and my strategy 100%. So let's see what the results are. I just want to show you that those were my only positions today. All 3 trades on that one stock. So lost basically $10 today. And so essentially those 3 trades equal 1.5 of my wins. So here's today, 998, but that's on 3 trades. It looks like 1 because it was all on the same ticker symbol, but that's 3 trades. You can see for the week, still green, 1461, up almost 2.5%. And again, these are 3 trades, and each of these is just one single trade. So it's deceiving. It looks like, oh, my losers are bigger than my winners, but that's not really true because that's 3 separate losers there, and these are all single winners. And then for the month, still considerably green, almost up 10%. That's, again, 3 red trades, but those are my only red trades for the month. So I can't really complain. And I just wanted to show you that in February I was trading this pretty much the exact same way, maybe a little bit more strict this month. But the reason why I have that 3 trade per day rule is because if you look over here, like let's say I said, let me just take 2 trades per day and I can minimize my losses because I can only lose up to 2 trades instead of 3. So if you look over here, if I would have done that in February, I would have been almost break even for the month. But because I took 3 trades, I was able to recoup some of the losses on the second trade, and arguably got close to wiping out the second trade losses on this third trade. So that's why I take 3 trades, at least until I have enough data to tell me that it's not worth it to take those 3 trades. So, but I have to do like 100 trades before I can really decide that. Last month was 33 trades, and so far this month I think we're at 14 trades. So I've got a ways to go before I can really determine, is the third trade, and second trade worth it. You can see here on my second trade, I'm very considerably green. And this is my very first third trade, so not really a sample size yet. And still doing well for the whole month, over $50 for a small cash account. That's pretty good. And I think that's all I have to say for today. Just from those three losses, look at what happened. My win percentage went from 91% down to 71%. But this is 2R trading. If you get 33%, you're break even theoretically. If your trades are exactly 2R and your losses are 1R. So essentially, if you're above 33%, you're going to be green. Obviously, very small green if you're just barely above 33. But if you're 50 or 60%, you're going to be considerably green every month. And so if I can stay around that range, I'm happy. Of course, the higher the better. But the idea behind 2R trading is not to be as green as possible. It's to average out being green. So that's where we're at. And I think I covered everything. So still, overall nice gain on the account. I started with 570 at the beginning and we're at 621. And we'll see what Monday brings. Hopefully a green trade, but you never know. All I can do is follow my strategy and my plan. And as always take your stop losses, always honor your profit target, and you should be green in the long run. Take care.